Hey, good rising, good afternoon, good evening, or good night. I am Taylor Andre, Taylor Made Real Estate Easy. We are so late. My apologies a zillion times over. And so I had clients that were currently looking at properties. And so I'm in the middle of the boondocks right now. I'm trying to make this work the best way that I can. I'm currently in my vehicle and just out here trying to make sure that you guys get the information that you need, that I promised you, while also staying true to my clients and ensuring that I didn't rush them through the process of getting to where I needed to be. And so we were looking at properties. We currently have one more property that we're supposed to be looking at, but because I have a commitment to you all, I wanted to make sure that my clients received all of me. And I am taking a time out before we go to the next property just to give you this information. So I'm going to make this as quick as possible, but to be clear, concise, and make sure that we are having real life conversations about what's important regarding preparing for home ownership. And so one of the things that you cannot ignore in preparing for home ownership is, what does it look like for me to have credit? What does my credit look like? What does my the score look like? Like, all of those things play a role in how we move forward. And so I'm here on your bottom left hand corner. Hey family, you can't see me because of the little living color lines, and unfortunately they don't let me move myself across the page. And so, with that being said, tonight we are speaking about boosting your credit score. We are covering understanding or overstanding your credit report, factors that affect your credit score, quick credit fixes and long-term strategies, as well as how to credit impacts your mortgage pre-approval, and avoiding common credit mistakes, building credit if you currently have no credit history. And again, my sincerest apologies. We are literally 1 hour late. I was working with a client, looking at properties, ensuring that we can find them the best property for their needs. And so please forgive me, for it was not my intention to miss our time together. With that being said, I am Taylor Andre. I've been a real estate agent for over 8 years, and in these 8 years, I have done the one thing that I absolutely love doing, and that's helping people navigate the process of becoming a homeowner, regardless if they are trying to sell and from that sale purchasing a new property, or whether they are a first-time home buyer and have never purchased. I also help clients that are looking for commercial real estate and helping to navigate, what does it look like for my business to have its own real estate. And so the first step, let's talk about understanding your credit report. And so today we are, let me just ensure that you guys can hear me. We are literally in my entire vehicle. And so I want to make sure that you can hear me. If you can hear me, clap one time. If you can hear me, clap two times. I just want to make sure that hearing me is something that you can do and is not problematic. And so I'm not sure if you guys heard me the first go round. And so this evening, for tonight's webinar, again, my apologies if you are just now tuning in. We were supposed to begin at 6:30 Thursday night, 6:30 with Taylor Andre, and unfortunately tonight I had clients that were looking to purchase a property, and so I've been driving around trying to make sure that my clients get what they need. With that being said, this evening we are talking about understanding your credit, factors that affect your credit score, quick credit fixes and long-term strategies, how credit impacts your mortgage approval, and avoiding common credit mistakes, building credit if you never had any history. And so I am Taylor Andre. I've been a real estate agent for well over 8 years. And within those 8 years, one of my favorite things to do is to make sure that people are properly educated on what it means to be homeowners, what it means for them to have financial literacy, what it means for them to have the highest and best situation for themselves in order to move into generational wealth. And so with that being said, the first step that we are going to talk about is, understanding your credit report. A credit report is a detailed breakdown of your credit history provided by credit bureaus. They pay. So your Victoria's Secret, your Macy's, your Saks Fifth Avenue, your Nordstrom, all of that pays money in order to report to credit bureaus like Equifax, Experian, and TransUnion. This credit report includes, but is not limited to, your personal information, your name, your address, your social security number, your accounts that are currently open, accounts that are currently closed, loan balances, whether that's a vehicle loan, whether that's a car loan, a home loan, a personal loan, student loans. In that payment history, do you pay on time? Do you pay in a timely manner? Are you paying the way you're supposed to be paying, in the way that you said and promised that you were going to pay? If not, why not? And how can we improve that? And so I say all of that to say your credit score has a lot of personal information. Before we even take a deeper dive, pull your own credit report, and you can do that at I'm going to go ahead and pull it up so you guys can see it for yourself. Okay, and so I'm pulling that up so I can go ahead and just copy the link. Free credit report.com. You can also there's also a way for you to call if online is not working for you, or it's not the best or most feasible way for you. You can absolutely go ahead and give them a call as well. And so the email, I'm going to drop this in the chat so we can pull this up on the screen. freecreditreport.com. With freecreditreport.com, you are able to access any and all of your credit. And this is a soft pull. It's not going to look as if anybody else is pulling it. It's not going to look like a hard pull. It's not going to come up in your inquiries. But first and foremost, if you pull your credit report, and for those who don't know, let me just pull the free credit report phone number, freecreditreport.com number. For those that are unable, and we all have people in our family that cannot or will not use any online. I know people that don't even have regular apps, don't even have a Facebook app, have no apps at all, and that's perfectly fine. Not everybody is looking to be socially connected. And so this is the information here. Annualcreditreport.com, freecreditreport.com, 1-877-322-8228. You can go ahead, pull your free credit report, and when you take a look at it, if there's names, like let's say for instance your name is Taylor Andre, and on it says Taylor Andre Black. Taylor Andre Black is not my name. You want to correct that immediately. You see an address, 123 Main Street. 123 Main Street is not your address. Even if you lived there once upon a time, that is not where you currently reside. Remove that off your credit report. Your social security number is off by 1 digit. Correct that. You want to correct everything that is not proper and correct. Credit accounts, these are open accounts, closed accounts, loan balances. If you see anything that does not resonate, there's a credit report. On your credit report, you had a Saks Fifth Avenue credit card back in 2012. It was 2012. I haven't had that card since 2012. It closed in 2012. You want to dispute that immediately. I have a template that helps you go ahead and dispute these things that are old, that are not yours, things that do not belong to you, or just don't make sense to be on your credit report because it's well over 7 years. Anything that is on your credit report still that is over 7 years old, you want to dispute that immediately, because it is causing you harm and it doesn't have to be on your report. Credit inquiries. This is inquiries made by lenders when you applied for credit, whether that is a credit card, whether it's a personal loan, a mortgage, or a car loan that's going to pop up. Let's say, for instance, you spent an entire day looking for a bank that was going to give you a loan for your new vehicle. Now you have 17 different banks that they try to check with, and those 17 different banks went ahead and pulled your credit report. You want to dispute all of them, because if you was at ABC Bank and 123 Bank and DCE Bank, but you ended up getting an ICE.com bank in order for your credit for your vehicle, those should not be on your report. Dispute, 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 dispute. Again, I do have that report if it's something, the template, if that's something that you need. Credit inquiries, we talked about that. Anything that you apply for, and public record. So this is something that a lot of people do not know. Your public record is always accessible from everyone. So if you have a bankruptcy, if you like, oh, I had to file bankruptcy, Donald Trump did it, I'm trying to do it too to make sure that I'm good, that is on your report. And depending on the bankruptcy that you filed, it may be on there for 7 years and it may be on there for 10 years. When you have a foreclosure, for example, let's say your parents gave you a house. You never paid any taxes on that home. And because you never paid any taxes, you never paid the mortgage, you weren't vested in this property, they foreclosed on it. Well, I don't care. It was in my mama's name and my mama gave it to me, and I don't care what they do with it. Now, all of a sudden, you have a foreclosure in your name because it's a property that you previously did not care about. And now it is on your credit for the next 7 to 10 years. A tax lien. If you owe the IRS is the biggest bully on earth. They are the biggest, strongest, most powerful gang that you will ever meet. And if you owe them, they're going to tell the world that you owe them. And many people can't get jobs because they owe the IRS. They can't get loans because they owe the IRS. They can't get apartments because they owe the IRS. And so if this is something that you currently are dealing with, this is above my pay grade. And so I would refer you out to someone who does handle this and is absolutely amazing at this. And so factors that affect your credit score. And so payment history is 35% of your credit score. Are you paying on time 100% of the time? And even though you may not be paying 100% of the time, you pay 98%. That 2% of your non-payment plays a huge role into the person that you are. And if you aren't paying your bills 2% of the time, I'm less likely to give you what you're asking for or what you're applying for, because you're not going to do right by me. There's a 2% chance that you're going to do me wrong. And let's say, for instance, it's not 2%. It's 20% of the time that you don't pay your bill. It's 40% of the time that you don't pay your bill. I'm not effing with you. I'm not giving you any money. I'm not increasing your credit amount. I'm not giving you access to the money that I have access to, because you don't even know how to govern yourself accordingly. And so your payment history, making on-time payments, and I'm going to take this a step further. It's not on-time payments. As soon as you get that bill, pay it. As soon. Not when it's due on the 25th. Not when you're about to be late on the 26th. No, pay it on the 15th when the bill comes due, when they send it to you in your inbox, when you receive it in your mailbox. Pay it that day. Amount owed. How much do you owe? This is called your credit utilization. So if you have a credit card for $100 and you're swiping, no swiping, and you're at $70 right now and you only have $100, you're at 70% utilization. This 70% utilization is telling me that you don't know how to govern yourself accordingly. You're maxing yourself out. I gave you $100 to borrow, but instead of using it accordingly, you're using $125. You don't know how to stay within your limits. You are excessive. And not only are you excessive, but you didn't even pay us on time. All of this goes into, let me break it down like this. If you have a family member and that family member says, hey, Taylor, can I borrow $10? And you're like, oh yeah, absolutely. Let me just go in my purse and here you go. Here's $10. They're like, I'm gonna pay you back next week. I got you on Friday. I got you on Friday. As soon as Friday hits, I'm gonna pay you. Friday comes, you don't even hear from them. The following Friday comes, you don't even hear from them. Then you see them at Thanksgiving. You're like, hey, how you doing? They're like, I'm good. Taylor, let me borrow $10. Then you like borrow $10. You didn't even give me the last $10. And so it plays a huge role in how, the bank, creditors, loans interact with you. Because listen, if you didn't pay Taylor back, I'm about to tell our cousin, Taylor, you're my cousin, you my favorite cousin. Can I borrow $10? Absolutely. You didn't call me. You didn't pay me back. You didn't communicate that you weren't able to pay when you said that you were going to pay. And so I'm like, hey, cuz, let me tell you something. Such and such asked me for money and didn't pay me back. Oh, they asked me for money too. For real? Why you didn't tell me? Well, I wasn't trying to put their business out there. The credit bureaus does not care about your business. They're putting it out there. And they're telling all your cousins that you failed to pay them in a timely manner. And this is why your credit report is so important. It's the relationship, or it's the reputation that you have as a borrower. It's the reputation that you have as a, let me hold something. It's that reputation. And if you're willing to destroy your reputation, that means you don't care about me or the money that I give you. And even though these are huge corporations that are giving you access to this money to borrow, if you do not pay it back, it has huge implications on you for years to come about how you engage and how you have a relationship with your money. And so we are really tough and really strict when it comes to financial literacy and having real tough conversations about money and about, our credit and about our savings and our steps in order to build generational wealth. But it's also important for us to talk about the mental health aspect that plays a huge role in how we engage in our finances. And so we do have that coming up as far as therapy, or group therapy, for us to discuss the many issues that we have that play a role in our mental health, that lead us to making really bad decisions when it comes to our money health or our financial health. And so the length of your credit history, let's say for instance, you saw your grandma put money underneath the mattress. You saw your mama put money in a coffee container. And so you put it in a cookie jar, and you've never seen a bank, and you don't deal with credit cards. I have client after client after client that like, oh, Taylor, I'm ready to buy a house, but I've never had a credit card. Having a credit history, that's like saying, I've never borrowed money from Taylor, but all of a sudden, Taylor, can I borrow $1,000? But I don't know none of the cousins that have ever given you money and you paid them back. So you're now trying with me and you're asking me for $1,000 versus other cousins that asked me for $100, asked me for $10, and they paid it back or they didn't pay it back. And so I know everyone's reputation, but because you never asked me for money, I don't have a recollection. I don't have a memory of how you engage with your money. I'm not quite sure on how to move forward with you. And so I'm wary of whether or not I'm going to give you this home loan because I don't even know how you act with a car. I don't even know how you act with a gas card, let alone I don't even know how you act when it comes to your Uber Eats. And so it is a little bit more difficult and more strenuous for somebody to trust you to give you a home loan when you don't have any credit history at all. But it is not the end all be all, and there are solutions. And so new credit, this is very much so how many new accounts do you have? Do you have accounts that are 10 years old? Do you have accounts that are 5 years old? Do you have accounts that are 25 years old? And this plays a role into why it's important to, as soon as our kids turn 13 years old, we add them to our credit report if your credit report is doing well, and helping to grow their credit, because now they have 10 years, 5 years worth of history when they weren't even standing on their own too in real life. And so quick fixes and long-term strategies. And so quick fixes for your credit report is disputing errors, disputing your name, disputing your address, disputing the spelling of your name. Like even if you're, let's say for instance, you're Taylor L. Andre. There's no L in my name. I know whoever that person is not me. And now all the accounts attached to Taylor L. Andre are now null and void because they are not associated with me. So before you even send one dispute letter, the first thing you want to ensure is that you have your name corrected on your report, that you have your address corrected on your report, and any and all personal information thereforth. Lowering your utilization, going back to you're currently at 70% of your $100. You're using $70 of your $100. You should not lower your utilization. You should be at least at 70%. What's crazy is Taylor Andre is currently at like 3% utilization. And if I bring my utilization from 3% to 7%, they still hit me like I was at like 35% and now I'm at 40%. It hurts my feelings actually every time they lower my credit report because I have a higher utilization. And so I really like to keep mine super low. I think right now I might be at 2%. I've never gone over 12%. And one of the things that keeps me really low is every single time I have an increase, whether you get bonuses, whether you get an increase in pay, whether you're an entrepreneur and you're making more money, you always want to update them and say, hey, I'm making more money. Can you increase my credit limit? And so my credit limit right now on one card is $55,000. Do I use $55,000? I don't even use $50, but that's not the point. I want a high credit amount so that way my utilization can always stay low. So even if I'm using $17,000, $22,000, $35,000, my utilization is still low because across my entire credit report, I'm using so little money that it's not even making a dent in my utilization. Lowering your utilization, paying down existing debt, especially high balances on credit cards with the highest interest rate. You don't want to continue to pay out of pocket for an interest rate. Long-term strategies consist of on-time payments. Building a track record of paying your bills on time is crucial. Keeping accounts open. The longer your accounts are open, even if they're inactive, and you want to use them, even if it's once every 3 months. If you have a Victoria's Secret card, buy a panty. Buy one of those $12 panties and then pay it off so that it doesn't close. If you have a Fingerhut account, buy a little t-shirt, for $22. Pay it off so you can continuously have that ongoing revolving credit, especially if it's your first credit card. Your first credit card was Macy's card. Go to Macy's, buy a little makeup container, $22 for makeup, $32 for a little piece of makeup, little eyeliner, lip gloss, whatever, just so you can keep it active so it can be your longest standing credit card. Diversity in credit types. This is adding different types of credit. So when I was not a homeowner, my credit would not be over 805. But the moment I became a homeowner, my credit dipped significantly. I think it was like 28 points my credit dipped. And then as I continued to pay my mortgage on time, I'm now at, I believe, 829 credit score. And that 829 is because I have so much diversity. Yes, I have student loans. Yes, I have a personal loan. Yes, I had a car loan. And yes, I had credit card debt. And then I added a mortgage onto it. So it diversified my credit type, which showed not only can I manage my credit cards, but I can manage a loan. I can manage a mortgage, and I can manage a car note. How credit impacts your mortgage approval. So mortgage lenders use your credit score to assess whether or not are you going to pay us back. You know, this isn't $100 credit card. This isn't a $25,000 car note. This isn't a $35,000 education loan. This is $600,000. Are you going to pay this back? Yes or no? Let me look at your credit report and see how you engaged in your money. Let me see how fiscally responsible you are, and then we can dictate and determine whether or not I'm going to give you the $600,000 for you to buy a home. And so when you have a higher score, you have better interest rates. A higher score can qualify you for lower interest rates, saving you thousands, tens of thousands, and depending on the house that you're buying, hundreds of thousands of dollars simply in how much your interest rate is. More loan options. You'll have access to more loan options and programs and different lenders. If you have a lower credit score, you're really limited in who's going to mess with you, who's going to F with you, like who even trusts you to give you money when your credit score is this low, versus if you have a higher credit score, everyone's like, listen, I know you're going to pay me back. I'll give you money. Here, take my money. Higher approval likelihood. So there's some people that have a really low credit score and they are not approved for anything. They will never be approved for anything because of how low their credit score is. And so you want to check with your score before applying for a mortgage, because it does not make sense for you to move forward when you know there's things that you need to fix. And in the same vein, most lenders, when it's not a bank lending but a brokerage lending, when you have a broker lending or like a broker pre-approval, they will also identify some of the parts that are hurting you and say, listen, this is what we can do to help. These are some of the steps and the strategies that you can take. And so they could also be your first stop for understanding some of the things that you don't get. Avoiding common credit mistakes. Missing payments. Missing a payment is your biggest mistake ever. And when you are, let's say for instance, Macy's is due on the 12th and you paid it on the 15th. It's only 3 days late. You're going to incur that late fee that you can always pick up the phone and say, hey, Macy's, completely forgot. I'm about to put it on auto payment. Can you take off that last late fee? Sometimes they will say yes. Sometimes they'll say no. Sometimes you'll have to ask for a supervisor because this person who just started a year ago doesn't know the rules and regulations between, yes, every 18 months, we will take off up to 3 of your late fees, up to 3 of your interest payments, and can possibly lower your interest rate if you ask and you have a really good pay history. I hope you did not let that gem drop on the floor. I hope you caught that one. Maxing out your credit cards. People with high utilization are shooting themselves in the foot. If you have $30,000 worth of credit access and you're using $25,000 worth of that credit, you are doing yourself a serious misservice. Why? Because you're paying 30% of 25,000 every single month towards interest, which could be going towards your principal. You're paying the minimum balance, and paying that minimum balance is going to keep you. One of the things I love about Capital One is they're like, listen, if you pay this $35, which is your minimum payment, this is going to take you the next 8 years. But if you pay a little bit more, it could take you 5 years. And I'm like, I'm not doing none of that. We gonna just pay this in full because I'm not using my credit card unless I can pay it in full. And if I can pay it in full, then I'm swiping that card in order to get my points for gas, in order to get my points for travel. Closing old accounts. Again, going back to the Macy's. Macy's was your first account. You got it when you was 22 years old. You're like, I don't even use my Macy's card no more. I'm thinking about closing it. Absolutely not. Keep it open. Go buy the panty. Go buy the boxes. Go buy a t-shirt. Go buy some lip gloss. Go buy some cologne. Buy something. Keep that account open, especially if it is your oldest one. Let's say you got it 15 years ago, you close it. Your next recent credit card is only 2 years old. So now it presents on your credit report that you've only been engaging in this game called credit for 2 years versus that Macy's card that's been open for the last 15. Applying for too much credit at once. I want a credit card here. I want a credit card there. I want a credit card there. I want a credit card here. Now all of a sudden I'm thinking you out to scam me because you got 16 applications out here. It's like dating. It's like, damn, I seen you with Joe. I seen you with Dick. I seen you with Harry, and I seen you with Steve. I'm good. They can have you. I don't want you. And that goes for the same for your credit. If you keep just out here throwing out the pom pom, don't nobody want to catch it because you're giving it away. And so if you're looking for all of this credit, you might be in need of business credit, which is completely different, in a completely different conversation that we can have at a later date if that's something that you want to discuss. Building credit if you have no his or her story. And so securing a secured credit card that says you take $100 and you want a secure credit card. You now have access to the $100 that you prepaid. So it's like a prepaid credit card. You put in 100, you use 100. You put in 100, you use 100. You put in 100, you use 100. So that way no one is at risk of you not paying them. And you're saying like, listen, I can do this all day. I can juggle this. It's nothing. I can use 100 and pay off 100 and put another 100 and use that and pay it off. And that's like building up your credit. Getting a credit builder loan. That's like going to the bank, getting a loan for $5,000. Paying it off, getting another loan for $5,000. You're just proving that you have a positive relationship with your money, and your money doesn't govern you. You govern your money, and I can pay this off and do it again 100-fold. It's nothing to me. I am responsible. I've just never engaged in this game called credit before, but now that I'm engaging, let me show you what I can do. Become an authorized user on an account. This is something that I engage in. Whether you are trying to boost up your credit report in order to purchase a home or to purchase a vehicle or to get more access to credit. When someone adds you as an authorized user, so for example, that is a service that I provide to a limited few. I charge $500 for 3 months. And during those 3 months, you sit on my credit. My oldest credit is 18 years old. I have over $75,000 worth of access on this current card. I add you to that card. It looks like you have 17 years worth of credit card history. It looks like you have access to $75,000 worth of credit amount. You do not get a card. I do not provide you with anything but the